Jonathan, Aberdeen Asset Management, a fund group inextricably associated with the emerging markets, reported earnings today. Emerging markets have been more or less lousy for some months or years now. Were the earnings lousy?
Earnings were actually not too bad in terms of revenues and in terms of both statutory and underlying profits. Things were just about flat. But despite that, the company reported net outflows again from its emerging market funds, the 10th consecutive quarter of outflows. And analysts remain quite concerned by that, as they are concerned by the fact that many of its emerging markets funds are underperforming their benchmarks.
So not only are emerging markets performing badly, but Aberdeen is underperforming emerging markets.
Correct.
And as you'd expect under these conditions, money is going out Aberdeen's door. Yet, revenues and profits are roughly flat. I don't know how to square that circle.
You square that circle by a thing called SWIP. SWIP stands for Scottish Widows Investment Partnership. The company bought SWIP from its previous owners, Lloyds Bank. Well, the deal was announced almost exactly 2 years ago, and it was completed in early 2014. Now, SWIP has a big franchise in fixed income. It has a big franchise in passive equity funds. So it is effectively diversified.
About as far from emerging market equities as you can get and
Correct.
still be investing at all.
Yeah. So although SWIP's funds have lower management fees than Aberdeen's on average, that reflects their passive franchise, it is still nevertheless added significantly to both revenues and profits for Aberdeen and insulated it to some degree from the turmoil in emerging markets.
Now, one of the hobby horses we like to ride at Lex, Jonathan, is the idea that companies, or more specifically companies' shareholders, don't get paid for diversification. In other words, companies should just do what they're good at, and diversification ought to happen at the individual investor's portfolio level. Is Aberdeen suffering this problem of diversifying and not getting credit?
It is to a degree, because although its exposure to sort of Asian and emerging market equities relative to its overall assets under management has pretty much halved since the SWIP deal was completed. It is still, as you say, inextricably linked within emerging markets. And the company said today that it expects the turmoil in emerging markets to continue for some time yet. There's very, very little chance of a material uptick in performance. And guess what? The share price fell 4%. So it is still, in investors' minds, it's still very much linked with emerging markets. And perhaps that's the way it will always be.
Thanks, Jonathan.